And CIO of Fident Asset Management joining us. Aishwarya, how are you looking at the markets now that there is trade deal uncertainty which continues to prevail, and we'll be starting off with the earnings season soon?
Good morning, Lovish, and good morning to all the viewers. I believe US government is still in action. White House is active, and we have seen slew of news coming out from that. And one of them obviously has been on copper, and then we saw pharma after hearing mostly the same rate what came out for almost those 14 odd countries. So I believe going ahead, we will continue to see this news hitting the market. But what is really important for us to understand that most of these news are more or less discounted, right? Even when he spoke about putting up to almost kind of a 200% tariff on pharma, to me it sounded more of a like a bark than a bite. We understand that the importance of pharma, the shortages over there, it's not pretty easy. That's why he came out and said that possibly he will give at least a year and a half to adjust to that. I think we are very close to putting some later coming out for India. I think the negotiations are happening, but I'm not really seeing too much of pressure on account of this coming onto the Indian market. The worst has always been factored. Market doesn't react to the same thing again. If we put out a better deal of this whole, discussion which is going on, possibly it will be breather for the market, and market can see more higher number in coming months. And as you mentioned, the second part of the equation is obviously we started this earnings season, especially from today and tomorrow. Tomorrow TCS will report number. And would like to say that the expectations when we enter these quarters are pretty low. Right. So obviously, when you're looking at the growth for Nifty for the next 2 years, we have the street is almost at 12%, 13%. But that number will be more backloaded, not front. So possibly the number that we expect for this quarters would be low single digit, across large cap and small cap. Mid cap can surprise on a slightly higher number of low double digit growth on PAT side. But overall, the expectations are very muted. So any surprise on positive D would provide much more impetus to the market. And that's why, Louis, if you look at the way where the fear gauge index is staying at almost 12.2 levels, it tells a lot about markets hungry for cues and takes the call from here.
Okay, okay. Aishwarya, once again we have Trump announcing 200% tariffs on pharma, which could be implemented in a year or so. But we'll watch out whether or not the political, spectrum also develops on that field. But Aishwarya, anything that you are expecting from the pharma stocks on that front? Because it seems today that they're brushing us out this news at this point of time.
Yeah, so even if you see in the US market yesterday when this news came, we don't see did see much of the impact on the pharma stocks over there. And what we have to understand is the quantum of trade India does with pharma in US is pretty I would say small in that parameter. So like on a monthly basis, India exports to US pharma ranges between 800 million to 900 million, roughly a ballpark figure of $1 billion. And if we put it to the yearly number, it is close to 10 to $11 billion. And the kind of import that we do from US on pharma space is not even $1 billion. So first of all, the reciprocal thing I think will not be a point of worry for the Indian pharma player. On second thing is the import tariff from US on pharma is very low. Absolutely, it's like 5% or 10%. 50% of the import that we get from US is almost exempted. So like if you play that negotiation deal, I think pharmas as a space will be much better off. And if you see the presence across on this 10 billion of kind of $11 billion of revenue that we get from US pharma, majority of them are in generics. And that is one area obviously which is seeing pricing pressure, and that will be very unlikely to see any kind of an tariff hike given the state in which US is sitting up right now. Obviously, Indian pharma will try to see and move more into complex generics, biologics, biosimilar, or GLP-1 and things like that. But I would believe, pharma is sweetly placed, at least from the tariff perspective. The clear indication of 1.5 years is that they are not prepared, right? And India and the overall space of thing is not that big. And I believe they need to have the continuity, the supply side. So I believe Indian pharma or as an index, as the many of these companies should do well. And that's why we are very positive more from pharma rather than we are positive on CDMO space. The way things are happening on biosimilar, the opportunity GLP-1 provides to the market. I believe it's a very, very interesting opportunity. And that's why very much orbit in these names in a portfolio.
Okay, okay. So you're mentioning that pharma is in a sweet spot, but we also saw that he imposed about 50% import tariffs on copper. So the copper prices have spiked up in New York. The futures have been trading like with about 14 to 15% gains. What does it mean for India in terms of EV perspective and of course the EV rollout perspective? Given that copper futures, copper prices have also gained, and there is the crisis of rare earth magnets also prevailing for India. So anything that you're expecting, any kind of impact are you expecting overall?
So obviously, what this tariff does, there's been uncertainty and volatility. We saw one of the sharpest movement in copper prices over the last maybe 40, 50 years. Uh, I think the direct impact is basically felt by wires and cable companies, where the raw material is almost 30 to 40% of their total requirement. And most of these companies keeps almost a month, month and a half of inventory. But what I understand is that most of this will be passed on, though that's why we are seeing not a very sharp reaction to many of these wires and cable company today. Second segment, obviously, well, like you mentioned about, will be or into air conditioning. So copper is used, and there are a lot of this capital goods area where they have this influence, especially in the transformer side. But the element of that raw material cost as copper is pretty small. Beneficiaries are just players like Hindustan Copper and Ericsson Vedanta, which I don't believe are really getting big out of this. What is really, really important for us to understand, as you said about the EV space, I think that again the element of copper is not very high from that perspective. What is really important for me to understand that this is one policy they have decided today. It might happen that we have seen in the last 4 5 months that there's a lot of U-turns which they normally take happens, and this announcement take a derailment. If that happens, possibly copper prices will see that coming back to where it was, and the overall journey on EV, or whether it is rare earth mineral or possibly the other segment of whether it is wire and cables, will not see much of an impact. That is the reason I tell you we are not seeing very, very sharp movement in many of those stocks which are exposed to copper price volatility as we open the Indian market today. So there is always this thing that there will be kind of an, some settlement because it's kind of used as an area to negotiate more than anything else. And obviously we have the pricing power over there. So I think overall it's not going to be a very, very big negative.
Okay, okay. Aishwarya, you mentioned that this time around this quarter you're expecting low single-digit growth from India Inc. in this quarter. But from a sectoral perspective, anything that you're betting on ahead of the Q1 results? The street has been quite bullish on FMCG. But what is your perspective?
Yeah, so if we look at the kind of growth that we will witness, at least for this quarter, I think it will be pretty lopsided. If I see some of the sectors which are expected to do well are metals, cement, and primarily oil and gas, with some stability from BFSI. Obviously, FMCG is the area which is getting a lot of eyeballs because we are seeing continuously good announcement from Cordis consumers, likes of Daburs and Marico's. And we've been hearing for the last 3 4 quarters the rural economy is doing well, the stability is there, the growth part is there. So the rotation of capital is happening to FMCG from the likes of BFSI or IT, at least in the last week, one or so that we have witnessed. But at least for this quarter, we are not going to see much of FMCG's result fanfare. The growth would be in low, I would say single digit, 2 to 3%. Possibly there will be more of a margin erosion which will happen. So this quarter, we will not see the best of the story, but at least for the H2 part is where I believe FMCG growth will start picking up. And on add to that what the kind of tax saving that will also provide a much needed impetus to the growth. So we believe FMCG's time is back. We believe that this growth will be visible once we see some more tailwind coming on the urban side of the story, but not much of expectation, at least for this quarter. This quarter, it will be all about cement, metals, oil and gas, and to an extent banking. Sectors like pharma or IT, possibly, or more of an export-oriented story, will continue to report muted numbers. No fireworks expected there. Coming on the sectors, as we said, we are very positive on pharma, we are very positive on chemicals, CDMO as a space. NBFC particularly, and some of the discretionary space on the FMCG side.
Okay, okay. You mentioned that you're underweight on the IT sector, but has your view a little altered after the Trump's tax bill was passed in US? Do you believe that, from a 1 to 2 year perspective, IT sector could see some revival going here?
No, so I said IT will possibly not do great this quarter, but we continue to remain overweight on IT. And we believe that IT is going through its sweet spot of, we are obviously seeing kind of some toughness in the growth part. But if you look at the deal pipeline across both large and mid-size, we have believed that, that growth is expected to revive in second half of this financial year. And on top of this, what the bill, this beautiful bill which has been there, I believe the whole story of US going to get into recession is possibly back-ended. And with all this volatility around, I believe IT most likely will remain a safe haven. So when the growth comes around in this space, we believe IT should do well. So that's why we are allocating more capital to IT. And even in this quarter, there might be large cap which will not perform too much of the street expectations, but mid and small cap will continue to see better growth. So large cap can do 1 or 2% growth quarter on quarter, but mid and small cap companies can do between 3% to 5-6% growth, and there will be more of a margin tailwind. So I think there will be money allocation or rotation of capital which will happen to IT during this quarter or post this quarterly results. We are trying to play this trend and going over it right now.
Okay, all right. All right, with that, we have to let you go, Aishwarya, but thank you so much for your time, and we hope that we connect with you soon.
Thank you, Lovisa. Thank you for being here.
Okay. All right, let's take a quick check of the markets. The subdued session and the choppy session continues for the benchmark indices. Sensex down about 150 points, Nifty below that 25,500 mark at this point of time. Advanced decline, if you look at the market breadth, however, seems to be in the positive territory because the advances have taken an upper hand. If you look at some of the sectors which has been contributing to the Nifty's up move, that is your Nifty Auto Index, Nifty Media Index is doing well, Nifty Pharma Index, despite the tariff news, has been doing well. Broader end of the markets, the breadth of the markets also seems to be on the positive side, because if you look at the mid cap and small cap indices, both of them have been outperforming the benchmark indices at this point of time. And India WIX, from a volatility perspective, that has eased by another 3% below that 12 odd levels. It is trading about like 11.8, so to speak. So yes, we could watch out for the second half for any improvement or any breadth recovery for the markets in the second half of the session. But for now, we have come to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 p.m. for closing, and we will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.